Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we're going to touch on Tesla as a company, as well as their TSLA stock price and their future price targets according to analysts. We're also going to go over the latest Lucid stock news and what's happening and developing with this specific electric vehicle company, and then lastly we're going to go over the latest updates regarding Rivian and their Rivian stock price. So if you want more videos like this one, don't forget to smash the like button right now, subscribe if you are new, comment your thoughts down below about Tesla, Rivian, and Lucid, and without further ado, let's jump right into today's stories. So we're going to start off talking about Tesla's TSLA stock, which has had a relatively strong rally as of late, and many analysts thinks that Tesla as a company is absolutely primed to experience fantastic growth over 2022. They also delivered better than anticipated fourth quarter delivery figures, which we're going to talk about later, and they also have great catalysts coming up because of their new Gigafactory located in Austin, Texas, and it's preparing for production later this month. We're also going to consult one of our favorite analysts, which is Dan Ives, who is an analyst from Wedbush, and he says that we are seeing it's a $5 trillion market opportunity in terms of electric vehicles, and it's the biggest transformation to the auto industry since the 1950s. However, Tesla's bull case going forward continues to be expanding supply. Based on all of our work in and around Austin, referring to the Gigafactory in Austin, Texas, we think starting next week we're going to get into the early stages of what I believe are cars rolling off the plant. So clearly this analyst is extremely excited for the new Gigafactory that is beginning its production later this month, which is fantastic news for both Tesla as a company and their TSLA stock price. There has been no official announcements regarding the opening of the Austin factory. However, all eyes are currently on their Gigafactory over in Berlin. Wall Street is currently expecting an update at least on one of these Gigafactories in their next conference call later on this month as well. Dan Ives goes on to say, when you look at Austin in particular, it's very smooth in terms of the build out. Hiring has been very strong over the last few months, and that's why Musk has made such a bet on Austin in terms of that being really the golden jewel of the ecosystem. And I've said it once and I've said it a million times, Tesla's main competitive advantage is in their manufacturing capacity, because these Gigafactories are a complete game changer, because we know that the demand for electric vehicles is extremely strong both here, China, over in Europe, and across the entire world. However, it's up to these manufacturers to actually produce as many electric vehicles as possible to keep up with the demand. So it's not necessarily the best electric vehicle company that has the greatest technology is going to win. It's actually the greatest electric vehicle company that has the greatest manufacturing capacity to actually meet this demand. And we can see that Tesla is actually doing both in terms of technology as well as vehicle deliveries. For instance, their numbers for December for their vehicle deliveries and sales over in China was over 70,000 vehicles, which is astonishing. This is very surprising because Tesla has taken advantage of the global chip shortage, which has caused other rivals of Tesla to not be able to sell or even manufacture as many cars as they would like. On the other hand, Tesla has actually reprogrammed some existing chips so they weren't really affected by the chip shortage overall, and this has given Tesla an extreme competitive advantage in the market. Dan Ives, which is the analyst that we quoted earlier, says that he believes that China remains a growth opportunity for Tesla, and I completely agree with him, because Tesla is anticipating to grow their deliveries in 2022 over in China by over 40%, which is absolutely fantastic. Dan Ives goes on to say, it's a tightrope in terms of China, but if you look at what's happening right now, the China growth story is actually accelerating for Tesla 2022, and that we believe is worth about $500 per share of the story. It's something we believe is underestimated by Wall Street. So what Dan Ives is alluding to here, he says that Tesla's stock price should be $500 just based off of the market opportunity that they have in China. So we can slap $500 on the current stock price, and that's going to land us around $1,400. And Dan Ives' specific TSLA stock prediction, he says that the stock is clearly going to outperform many other stocks in the overall market, and he actually has a bullish price prediction for the stock of $1,800 by the end of 2022. We can also see that Tesla also has come out with other news regarding a deal that they signed with Rio Tinto in Australia, so Tesla can have access to various minerals and metals that are going to help them produce their own batteries. And we already know that Tesla has battery factories in Texas and Nevada, so securing a domestic supply of more minerals and metals is going to be in Tesla's greatest advantage. And when they say domestic supply, they're actually not referring to Rio Tinto, they're actually referring to a deal that Talon has signed with Tesla recently to give them around 75,000 metric tons of nickel concentrate. And this contract is either supposed to last 6 years or until Talon Metals can actually give Tesla around 75,000 tons of nickel. From a technical analysis standpoint, the TSLA stock and their forecasts right now are very inconclusive. So the TSLA stock has had a failure to break the 9-day moving average above $1,070 until recently, which could cause the stock price to rally even more. However, if it falls below $1,070, it could lead us to testing around $886, and I'm going to use this as a fantastic buying opportunity. The good news is that the relative strength index, or RSI, is neutral at around 50. If you're not familiar with the RSI, it's a momentum indicator, and if anything has an RSI below 30, it means that according to momentum that the stock is oversold, which means it could be a good buying opportunity. However, on the other end, if the RSI is over 70, that means it's overbought and the stock price is way too high according to the momentum indicator. Now I want to talk about what other analysts think of the TSLA stock, specifically what Goldman Sachs analysts and a few others think about the stock. Overall, the Goldman Sachs analyst is extremely bullish on the TSLA stock and says that it's a great buying opportunity right now, and he has a price target for 2023, the beginning of 2023, for $1,200. The reason for this optimism for the great buy rating for the stock is because of their higher than anticipated delivery results for Q4 of 2021. We also have another analyst from Morgan Stanley that has upgraded his price target even higher than the Goldman Sachs analyst, all the way up to $1,300 per share, and he clearly has a buy rating for the TSLA stock price. I tend to agree with both of these analysts, however, I'm very bullish, and I personally have a price target for the TSLA stock of around $2,000, which we could see either in beginning of 2023 or even the end of 2022, depending on how bullish you are. And the reason why I am so optimistic is because if I look at their revenues, we can just see a great positive slope here. Same thing for net income. Amazing positive slope. The company is continuously improving on all of these metrics right here. And lastly, we can see that their operating margin, which is extremely important, actually has the most positive slope out of these three statistics. So as Tesla further improves these various metrics and ramps up their production as well as their overall technology, thanks in part to their gigafactories, this is going to be fantastic news for the TSLA stock and Tesla overall as a company. Now I want to touch on Lucid stock, ticker symbol LCID, and it's become an investor favorite for the United States. The current stock price for LCID stock trades at $44 per share. The low end price target is $16. The average price consensus is $42 among analysts, and the high end price prediction for the beginning of 2023 is $60 per share. It also is trading at a very high market cap of nearly $70 billion. However, we could still see the stock continuously surge because of how optimistic investors are about electric vehicle companies. Lucid also plans to expand their product selection and release their Air sedan at the beginning of 2023, and it will also launch a new SUV by the end of that year. Lucid also has an impressive amount of cash on hand, and they say that it's so much cash that it can literally fund their operations until the end of 2022, even if they make no profit and no revenues at all, which is always good to see. On top of that, they also raised an extra $2 billion of capital just to give them a cushion so they could continue all the way into 2023 without any revenues. However, that's not going to happen, and we'll talk about some of their revenue projections later in the video. However, their current cash stockpile and or short-term investments such as cash equivalents will equal around $7 billion, which is fantastic news. Lucid management also replied to a Twitter post stating that the expansion to European markets will begin this year, so stay tuned for country-specific delivery information. And this came from a CNBC article, so I'm very excited for Lucid to expand further than the United States, which will help them boost their revenues and become profitable much faster. The reason Lucid is expanding and targeting European markets specifically is because the International Energy Agency said that Europe could actually overtake China as the world's largest EV market, which they did successfully in 2022. However, I don't think that's going to be very long-lived, and I think China is still the EV capital of the world, but the European market is a close second, followed by the United States shortly after. This should give investors great long-term confidence in Lucid, and there's also talks, according to the Financial Times, of Lucid building a manufacturing facility in Saudi Arabia, and this is because Lucid has many backers from Saudi Arabia's sovereign wealth fund, which invested around $1 billion into Lucid back in 2018. I also want to add that Lucid also has some of these catalysts already baked into the current stock price because it is trading at a very crazy valuation right now. However, like we've seen with Tesla, the stock continuously goes up year after year. So if you are betting long-term on these plays, then I wouldn't pay attention to the stock market volatility or even the volatility of these individual electric vehicle stocks if you're in it for the long term. Lucid is clearly focused on expanding their manufacturing capacity and technology, specifically in 2022. They also want to expand their production for their planned Gravity SUV, which is also going to increase their revenues because now they're entering a new vehicle model market. I also want to talk about Lucid's management. As just a management play, Lucid looks fantastic because they have talent from Apple, Google, and Tesla. So let's talk about some of them. Lucid Motors has assembled an amazing management team according to this article, and I can't help but agree with that. Lucid's CEO, which is Peter Rawlinson, was a former Tesla employee, and he was the lead chief engineer for the Tesla Model S. Lucid's chief financial officer, who is Sherry House, was the treasurer and head of investor relations at Waymo, which is Google's autonomous driving company. So we already have two big hitters here. We have someone from management that used to work for Tesla, and not only did they used to work for Tesla, they were a chief engineer, and we have another person on the management team that has relations with Waymo and therefore Google, so that's amazing news. According to the article, Sherry House also has a decade's worth of automotive OEM technology experience, and she also worked for General Motors. Speaking about other car companies, Lucid's vice president of design is Derek Jenkins, and he formerly has worked with companies like Mazda, Volkswagen, and Audi. So this is already a stacked group, but the group goes on. We have even more people in management that are extremely successful. Lucid is just stealing the world's best top talents, including another former employee that used to work for Tesla, whose name is Jonathan Butler, who is currently the vice president of general counsel in charge of all Lucid's legal policy functions. On top of that, we also have Mike Bell, who is a former chief technology officer at Rivian, and he also has 16 years of experience over at Apple. He even helped develop and create the iPhone, iMac, and Apple TV products, among many other Apple products. We also have another former employee of Apple who served for over 15 years on Apple's management team, which is Margaret Burgraff, and she also has 6 years of experience at Intel. So this is a stacked management team. Lucid is clearly building a technology company, not even necessarily an electric vehicle company, but just based off of the management, this team is absolutely stacked, so it's no wonder why investors are so excited about this company. Despite all of this fantastic news, I do want to talk about Lucid's revenues. So Lucid only recently recorded around $232,000 worth of revenues for one of the previous quarters, and that was even less than the $334,000 of revenue from the prior year for the same quarter. Lucid is also suffering a net loss of around $524.4 billion in that same quarter, and the comprehensive net loss for the company through the first 3 quarters of 2021 was $1.5 billion. Now, I do want to balance this with the amount of cash that they have on hand that makes up for any of this net loss, but I do want to make investors at least aware of this, that the company does not have strong revenues right now. Even if we incorporate the 17,000 reservations that Lucid has for their various vehicles, that would only generate around $1.7 billion worth of revenue for the company. So still a far cry from their overall market valuation, so they're definitely going to have to scale their revenues very quickly. Now, with that being said, I am still very optimistic about Lucid. However, I personally am going to wait for the stock price to pull back a little more before I double down on any of my investments or even average down my average cost. Now, I do want to talk about Rivian as well, and they recently unveiled their plans to create nearly a 20 million square foot facility, which is extremely impressive. This would be over 5 times the size of Rivian's former plant in Normal, Illinois, which will also still produce vehicles on top of this plant, so they're definitely keeping both plants. Rivian, if you didn't know, is an American automaker, and it's on the cusp of delivering its second of 2 flagship electric vehicles, specifically the R1S SUV. Rivian also recently stated that it expects to begin its electric vehicle production at this Georgia plant, which is the 20 million square foot plant, compared to their almost 4 million square foot plant in Normal, Illinois, and that's going going to begin in 2024. They even say this, and I quote, "The plant, which will eventually employ more than 7,500 workers, represents a key next step as Rivian scales aggressively towards higher capacity production for our future generation of products. Once ramped, the Georgia facility will be capable of producing up to 400,000 vehicles per year, and that's an astonishing number. Construction on the facility is expected to begin in summer of 2022, and the start of the production is slated for 2024. Site considerations included logistics, environmental impact, renewable energy production, availability, and quality of talent, and fit with Rivian company culture." So overall, this is not only a fantastic public relations and PR move by Rivian, which should excite investors, this is also just great in general. I also want to talk about how Rivian has declined in price lately and what the newest price targets are for Rivian. So recently, Rivian stock has fallen around 5% because it missed its 2021 vehicle production targets. The electric vehicle company said that it could produce up to 1,200 vehicles before the end of 2021, and they only produced 1,015 vehicles. Because Rivian has missed their delivery estimates by analysts and even what Rivian themselves said that they could produce, the stock ended up falling to around $80 per share. The stock may have also fallen relatively rapidly because Rivian's chief operating officer, who is Rod Copes, left Rivian last month as the company was just starting to ramp up its production. But with that being said, a Rivian spokeswoman confirmed that Copes' departure, according to CNBC, is characterized as a retirement, and apparently it was planned for months. But what about the Rivian stock price targets according to analysts? What do the analysts think about Rivian? Well, Wall Street is actually very positive and bullish on Rivian stock overall, and Redburn began coverage of Rivian on Tuesday, and they give Rivian a buy rating with a great price target of $141, which they think that Rivian could reach by the beginning of 2023. Other Wall Street analysts give Rivian stock a neutral rating and say that the current stock price is actually below its price targets, thus making it a good deal. However, I am very bullish on all of these companies, but to various degrees, but I want to hear what you think. What are your thoughts on Rivian and Rivian stock, Lucid and Lucid stock, and Tesla and their TSLA stock? I'd love to hear your price targets down below. Sound off in the comments, subscribe if you are new, remember to smash that like button for more videos like this one, and I will see you in the next YT video.